Hey everybody, welcome back to the channel. Today I want to go over the PM Silver Bullet session on Thursday, July 6th. So where are we when we come to the chart here at 2 p.m. Eastern Time? Well, on the 5 minute, there is a consequent encroachment of a wick, and that's where that dotted line is. And we have a 5 minute fair value gap. So buy side liquidity here. Let me show you where that's at. 5 minute fair value gaps over here, and then buy side liquidity obviously is right here, resting above that old high. So when we come up here, that's where we're looking like we could be targeting. Obviously you have lows down here, relatively equal lows. You have a swing low down here, so sell side liquidity is down here. So that's kind of where we're at the chart. I do see a fair value gap right in here, so let's mark that on the chart as well. And let's see what happens here. Now I'm going to buy or sell using trading view. I have to use on closed candles. So when we play candle by candle, if I see a position that I want to get in, I'm going to click the buttons down here and see how it plays out. So let's get started. This is 2 p.m. Eastern Time. So let's see. We have a volume imbalance right here. Let's see how that gets respected. We have fair value gap here, so we're in the middle of a fair value gap here. Okay, volume imbalance there. So we have highs being taken out, so liquidity grab here. I need this broken for a market structure shift. So now we have this swing low here and this closed here, so if it comes down here with displacement, that'd be a market structure shift. So let me just mark this up, what I'm showing you here, what I just said. So we have liquidity being taken here. Buy side taken there, right? We need our market structure shift here. We need buy side liquidity is taken there. But let's see what happens here with these candles. Okay, so we just came, are we equal there? Looks like it. Let's see if we go past it. We don't. Alright, so we've got some relatively equal highs here in the mid candle. So I need this to be broken for a market structure shift. I need some displacement. Let's see what's going to happen here. Otherwise, we're still targeting this buy side liquidity draw up here, consequent encroachment up here. That's our higher time frame liquidity. So let's still keep it an open mind at this point. Still waiting to find something going on here. So there's a volume imbalance right there. We're at that line here, so now I need it to break because there's a fair value gap right there. Let's put that right there, fair value gap. So if I can break below this, we do. So we have a market structure shift there. I just would like to see it close a bigger candle. You know, I like to see it, really take it out, not just wick it out with there and close right there. So I'd like to see it more. If it came up here, I would take a trade if it came up into this fair value gap and just shoot for these lows here and stop above here. Now, it is suspect, though, with these relatively equal highs here. So, I'd give it probably a B setup at this point if it came down here. Just because we didn't close really strongly below this swing low. I would call this a B setup. It'd be a higher risk trade. But it does follow my rules, right? Liquidity has been taken. There is a market structure shift. There is displacement. So I would take it. Just know that it's not a high probability trade, knowing that there's buy side liquidity that's resting right here with relatively equal highs. Some volume imbalances. This is in the volume imbalance, so it's being respected there. Got to see how it plays out here. Now that's better. Now if there comes back into this, I'll take the trade. I like that. Much better. Much, much better. Okay, so now what I didn't like is I didn't like this being taken right here, because now we can just reverse back because we've taken sell side here, some sell side liquidity here. So if you mark this out, right here, you got some sell side liquidity being taken right there. So now I've gotten both This could be a seek and destroy concept here, where you've got sell side taken here, then buy side taken, sell side taken, you know, so now I might be looking up for buy side to be taken. So if it comes up in here, I'd still probably take it, but I gotta see good clean price action. That's what I'm looking for now. Ooh. Okay. So let's see what we have here. We left a fair value gap here. I didn't mark that. And we have a volume imbalance here. Okay, so price didn't respect that fair value gap, just blew right through it, leaving behind a volume imbalance. Stopping at this fair value gap. Now, if I was over here and saw these two, I wouldn't take a trade on this first fair value gap. It's obviously from high to low here. It would be in discount, so I'm not taking it. This one would be, it has to be up in here inside this one to go short. This one wouldn't be. But the fact that price just traded right through it, didn't even respect it, is reason to question it. Okay, so let's see, that's getting respected there. Let's see if we trade into it. Okay, so that leaves another volume imbalance right there in between these two. Okay, just got to follow your PD arrays. So, okay, so then this fair value gap still isn't being respected, so they don't even care about it. This volume imbalance traded right through it. So obviously the PD arrays in this area, it's just they're not respecting any PD arrays. So right now I'm just kind of watching price. Yeah, there's another volume imbalance there. Just kind of watching what happens. Okay, it does respect this fair value gap, and it violated this volume imbalance to trade right through, but stopped there. So again, you're in chaos right now with PD arrays. One stopped in there. That's respecting that volume imbalance. Blew right through this one. It started here, blew right through it. Alright, we come back down. We're just going right through PD arrays. We're not respecting them or anything. We are respecting this fair value gap though, so that leads me to believe that we're going to go long. So if we were going to go long at this point, because we've taken sell side liquidity out here, I would need, and this is the lowest low here, swing low. If we violate that, then I'd be looking to come back and go short. But if we came back up, I would need these swing highs to be taken out for a market structure shift to go up. Okay, because we just took liquidity down here, I would need to go back up that way. You just took liquidity down here, I would need a market structure shift to go back up. Wow, look at that. Just cutting through all of that. Just violating all those PD arrays. Like they don't even matter. Right? So okay. See what happens here. So now we've got a lot of relatively equal highs right there. That's in the fair value gap. I want to see it break further than that. For that, I need more than that to say we're going long. Okay, that helps. So now this could be a inversion fair value gap, right? Let's change that to inversion fair value gap. Let's see how it's being respected. So you could take a trade there. But we're respecting this volume imbalance here, so I'm not sold yet 100% because there's this volume imbalance here. So I'm just kind of watching. It didn't respect anything over here. It came down, but it stopped right here. So it could be, you know, if you pull the fib from here to here, this is how you analyze price. Here to the high to the low, we're still in optimal trade entry right here. So not 100% sold. I'd like to have a close above here and then pull back down, and I would get in. So for me, it's still too risky for right now. I know we're coming up. We're over halfway on the silver bullet side, but this is tough price action, right? A lot of people probably took trades in here and got taken out. So I'm not ready to pull the trigger yet. Respecting that fair value gap, which is good. Came down to this volume imbalance. It's good. That's being respected there as well. Just I want to see movement here. I want to break through this volume imbalance and then come back down. Ideally, that's what I want to do. But I don't want to be taking out these highs, because then it's kind of the same thing. Are we just going back and forth, back and forth, back and forth? That's a good sign. But I can't have this taken out here. It's got to come back down. If it comes back down in here, I would take a trade. Let's see what happens here. Oh, it's close. It does leave a fair value gap here. Okay. I need it. I still want to come down to this one, this inversion. I think inversion is stronger than the fair value gap. And when there's two, I like the lower one. So I'm taking the inversion fair value gap. So a lot of things have to happen. I can't take out this high, or it can't take out this high, and it needs to come in this inversion fair value gap. And if it takes out the highs, my trade's violated, and I'm not going to take it. If it comes down here, I'll take a trade. That's where I'm at right now in this price action. Come on, there you go. All right, so I'm going to buy 2 there. Okay. We do have a market structure shift, like I said, right on here. I didn't put that on the chart. Buy there. I would put my order there. My stop, I'd put it down here below this fair value gap, inversion fair value gap, below this volume imbalance, below this inversion fair value. I got multiple PD arrays, so it takes me out. Chances are we're just consolidating, bouncing in this range. But right now I'm taking this trade. I want to see these high. They're suspect. When they don't clear, they're just 1 tick away. This is all relatively equal highs. There's a lot of liquidity buildup right here. And then there's even more up here. So I want to go here. Now when since I'm in, and price goes up, if it comes up beyond this line right here, I'd take a partial right in here. Anything closing up into this 5-minute fair value gap, I'm taking a partial. So I'm going to take 1 off. And all that one, and on my stop would be above break even. Okay, so let's see how this plays out. Okay, so I guess right there I'm selling 1 contract like I said I would. My stop, let's put this on here. This would be my trailing stop here. My stop is now 1 tick above break even. And since this is happening, I'm so close here. I'm probably at 90%. Me personally, if I'm trading the Apex account, I'm putting my stop there. And I'm fine if it takes me out, because then I've only got this much trailing drawdown that was applied to my account, but I still got this much in profit, so I'm fine. But if I left my stop down here and it came all the way down, I've got all this in trailing drawdown on my Apex account. So for me, because it came so close to hitting my TP, I'm now below this swing low. And I'm perfectly fine if it takes me out and then spikes all the way up through and takes me to TP target. Fine with that. I can live with that. I'm totally fine with that. All right, well, it would have taken us out there, but I got to close it right here to sell the last one. We'll take it out there. Because of the way TradingView works, it's on the close of the candle. So my trailing stop is now gone. So let's see how the rest of this played out. There's the end of the Silver Bullet session. So we got $362.50 trading this based on market structure. This was really ugly price action. We used the inversion fair value gap as an entry. We saw a market structure shift after liquidity has been taken. We
stuck to our rules at the start. When liquidity was originally taken, we had a market structure shift. It never came up into the second fair value gap, so we never entered. And then we just saw price action doing this. And so when it didn't respect any of these PD arrays, we waited for liquidity to be taken again, which it was, and then a market structure shift, and then an entry. And we got an entry right there and took it. That's our PM Silver Bullet session on Thursday, July 6th.